Have you filed your income tax returns lately? If not, make sure that you're disclosing all your sources of income accurately. This is because today, multiple financial transactions are getting captured by the tax authorities. Hi, I'm Sanket Dhanorkar from the Economic Times, and I'm here to give you a lowdown on all the expenses and investments that might just get captured by the taxman. There are three ways in which the taxman might capture some of the financial transactions. The first is the PAN card. There are multiple transactions which require that your PAN card is quoted along with the transaction. Some of these transactions are above a certain amount, monetary amount. There are other transactions which require quoting of your PAN card, irrespective of the amount involved. Here are some of the examples of these transactions. PAN is needed for transactions irrespective of amount involved in these cases. Purchase or sale of any motor vehicle, excluding a two-wheeler, opening an account with a bank other than a basic savings bank deposit account, a request to a bank for issuing a debit or credit card, opening a demat account. Other than these, there are other transactions above a threshold amount for which you require to give your PAN card. Some of these transactions are making a cash deposit in the bank or post office for more than 50,000 a day, a cash payment to a hotel or restaurant for more than 50,000, purchasing mutual fund units, bonds, debentures, or shares for more than 50,000, purchasing any prepaid instruments like money wallets or gift cards for more than 50,000 in a financial year, payment of life insurance premium of more than 50,000 in a financial year, purchase of bullion or jewelry more than 2 lakh per transaction, or even purchase or sale of an immovable property for more than 10 lakh per transaction. Apart from the PAN card, there are certain high-value transactions which are also reported by a certain specific entity. These are recorded in the annual information report filed by the entities. The tax department will compare these reports with the tax return filed by you to compare or to check for any inconsistency. These transactions will also get captured in the Form 26AS of the taxpayer. If you want to check if your Form 26AS captures any of your financial high-value transactions, you can just check the AIR section under Form 26A. Among the high-value transactions that can get captured by the taxman are cash deposits in one or more bank accounts of the person, including a current account, if the deposit is for more than 10 lakh in a financial year. Even cash purchase of a bank draft or pay order or banker's check for the same amount in the financial year may be captured by the taxman. Purchase and sale of immovable property for more than 30 lakh per transaction, buying mutual funds, bonds, debentures and shares for 10 lakh or more in the financial year, buying back shares for 10 lakh or more in the financial year, or even buying foreign currency through a foreign exchange card or traveler's check for 10 lakh or more in the financial year. Payments towards the credit card bill for more than rupees 1 lakh in cash or for more than rupees 10 lakh to any other mode will be considered as a high-value transaction. Another avenue for the taxman to capture your transaction details is the TCS or TDS, better known as tax collected at source or tax deposited at source. Now, as you all know, tax deposited is the TDS is deducted when a taxpayer receives salary, interest, income, or dividend. Similarly, TCS is collected by a seller at the time of making a payment for any transaction, purchase of goods or services. Recently, there have been some changes in some of the items that come under the ambit of TDS and TCS. Let's look at some of these. From 14th May, new TDS rates have become applicable on certain items. Interest received on securities, fixed deposits, and dividend from mutual funds and company shares now attract a TDS of 7.5% compared to the earlier 10%. Payment made for any land or property now attracts a TDS of 0.75% compared to the rate of 1% earlier. Similarly, payment of rent by any individual exceeding rupees 50,000 per month now attracts a TDS of 3.75% compared to 5% earlier. Apart from new TDS rates, there are certain new transactions which have been brought under the ambit of the TCS. These will come into effect from 1st October 2020. Some of these are outward remittances in excess of 7 lakh in a financial year. which will incur a TCS of 5%. Any remittances exceeding 7 lakh for purpose of pursuing education through a loan obtained from a financial institute will attract a TCS of 0.5%. A purchase of any overseas tour plan will incur a TCS of 5%. Similarly, sale of any goods other than exports for value exceeding 50 lakh will incur TCS of 0.5%, or 1% if the buyer hasn't provided the PAN or Aadhaar card to the seller. So these are some of the ways in which the taxman keeps an eye on you. Make sure that you are on the right side of the law and don't think that your transactions will not get captured by the taxman. For more such videos, keep watching this case.